Good evening to you at this hour on the business desk. The FNB BER Building Confidence Index has revealed a 40-point increase in the third quarter of this year. The index that monitors sentiment in the building sector suggests that, at least in terms of work, non-residential builders continue to fare better than their residential building counterparts. The weakness in residential building activity reflects the downbeat trends in the housing property industry. Senior economist at FNB, Siphamandla Mkhwanazi, speaks to us about this. Thank you so much for your time, Siphamandla. Do paint the overall picture of this reading.
Right. Good evening, Dumisang. Good evening to your viewers. I'm happy to be here. Look, we did expect that we were going to see an improvement in sentiment. We had seen this in other sentiment indicators, and at least it was a bit telegraphed in the previous round of surveys which were done just before the elections. We did see that a lot of market participants were holding back a little bit because of that heightened uncertainty. But as soon as we got the election results, things were a bit more clearer. So it's not surprising that we saw an improvement in sentiment this time around. What is interesting, though, is to look at the subcomponents of the entire building value chain. What we see here is that out of the six sectors that the survey covers, 4 of those recorded an increase in sentiment, while 2 recorded a decrease in sentiment. But what was also interesting is that the 2 that recorded a decrease in sentiment actually also recorded an increase in activity. So it was a bit of a confusing result there, that sentiment detracted in those industries, but activity increased.
Allow me to ask this. It's a question that we hardly ever pose, but what then is to be said about the activity in the likes of rural as well as township economic activity where building is concerned?
Right. So to cover that market, Dumisang, we look at the activity of retailers. That is how we are able to track, what we call the informal market. What we see here is actually in that informal market, it actually recorded the highest sentiment of all of the sectors. It recorded 57, an improvement of 10 index points from 47 in the last quarter. And what we see if we break down that 57 is that sales have increased. They are expected to increase further as we go forward, and that the input prices are now starting to fall, which is an important factor. And I think that has got to do with the fact that we are now, electricity price, diesel prices have come down a bit, so production costs have reduced, and it does appear here that those cost savings have been passed on to retailers. We've also seen that we haven't had load shedding in such a long time, so that spending on diesel costs has sort of gone away. So that all of those factors seem to have improved the mood of retailers. And when we look at the retailers, as I said, it tells us a lot about the informal market.
Lastly, and staying with that positivity, while demand for non-residential structures is improving, it's coming from a low base. At the same time, I must ask about the near-term outlook.
Yeah, so the near-term outlook here, it does paint a picture of cautious optimism, which we take under the circumstances. We see, especially when we look at activity at the initial phases of the building project. So we look at activity of architects and quantity surveyors. Their activity suggests that we should see more activity down the value chain in the coming quarter. So the outlook there is relatively positive. And if we also combine that with the expectation of lower interest rates, the continued cessation of load shedding, that should be supportive of the non-residential sector. And we do hope that it comes through.